Okay. The purpose of this session is to give you an introduction to the Tranche Manager bundle that we created quite a few years ago now. When we first created this, it was before there were accounting mandates to do FIFO, and so it's evolved over time. So FIFO was added later, and then recently we added impairments and some more batch processing controls. So it's been evolving, but the genesis of it and the core of it really goes back, say, 6 years. The concept here is what we call a tranche. When I look at my tranches, I've just created a view here, right? Typically, we have active tranches and closed tranches. And this one is actually a closed tranche because the balance is 0. So let me go into the tranche and show you a little bit. When we debit a wallet with crypto, and that crypto is coming into our world for the first time, right? We're not moving it from one wallet to another. We need to record an acquisition for that tranche, for that Bitcoin, or whatever the crypto is, and put a stake in the ground of what the cost was, right? And so this tranche has a balance of 0 right now, which means I sold it. But if I click on the acquisition tab, we can see that I purchased 1 million microbits, which is 1 Bitcoin, for 55,000. And in this case, I coded it to platform income. By creating this record, right, by defining it's going into my wallet, and I'm going to recognize it as platform income, and it's at this value, it creates this journal entry automatically. And so this is what's putting it into the ledger now. So now when I create a tranche and I save, it creates this journal entry automatically to record what I defined on my tranche, right? Debit my wallet, Bitcoin goes in, and I'm going to record that as platform income. And that's putting value into the wallet. But let me just share something else then. Really, in our world, a wallet is treated like a cash account, and we treat it as a bank account along with all of our other accounts, right? So if I look at a brokerage statement, right? So let's say Tagami Brokerage, I'm going to have a wallet, BTC, and I'm going to have a USD account for my settlement. And I set up these accounts for us just to for demonstration. I have, let's say, a wallet that I have custody over, right? So maybe I'll call this my BTC wallet. I have a wallet on my exchange where I do selling. And then when I sell, the funds settle into this account. So this is my settlement. If I were to get a brokerage statement from Binance, right, I'd see some value here and I would see some value here. So the key with this is just seeing that in our world, right, a wallet is just like a bank account, and we set it up like a bank account. So let's go into it. Right, so it's a bank account. We've defined the currency as Bitcoin, and one of the restrictions in NetSuite is a bank account can only live in one subsidiary, and so we can see that we put this into the U.S. subsidiary. And without, this is really what then defines this as a wallet, right? It's its own account. It has a currency on it, and this is then declaring a GL account that we can post to. One other thing to then see is we have what we call a wallet group. The wallet group is a way to group together transactions for the purpose of creating a FIFO stack. So I can have, as you can see, multiple FIFO stacks. And what we've been working on is, right, if I have different subsidiaries, really I just have a FIFO stack for each sub. And what that means is, when I process my gain or losses, I can have different FIFO stacks for those different cryptos. And so the original intent of this was to have an investment versus operations. And when we have an investment in Bitcoin for long-term holdings, we treat that differently for our gain losses and our operating flows of crypto that we receive, sell, right, for operations and such. And so really we can't game these, if you will, right? These are just on a straight FIFO stack, and it comes in at a cost. We sell it at a certain price, and we recognize gain losses. But these particular crypto, let's say that might have been paid in capital or part of an early buy that we knew with the intent of holding, segregating those into different FIFO stacks. So within the same sub, I can have different FIFO stacks, but then we can also use the same concept to create FIFO stacks for different subs.
I also wanted to highlight that within the different wallet groups, we could also have multiple wallets. So one thing that was nice, we tracked when an asset moved from one wallet to another wallet, so we could pinpoint the balances per wallet.
When you're saying wallet, like a real wallet on the blockchain?
Yes, we have 3 different wallets through which coins flow through in the back end, being able to identify the amount of assets within each wallet.
Do you mean the hot wallet, cold wallet, and the deposit wallet? Okay.
I think it makes sense to create them in a way that lets us easily reconcile them. What that means is this Bitcoin that came into this wallet could get moved over to my other wallet, and it's the same wallet group. Therefore, it's in the same FIFO stack. I can move, as long as I move those coins to the same wallet group, it doesn't change the FIFO stack. Let's go through a transaction. Let's create a new tranche. All right, so let's say we acquire this in one wallet, and then we're going to transfer it to a brokerage to sell. That's a pretty common transaction. Okay, so one thing that I glossed over pretty quickly is the idea of the denomination of our crypto. By default, we store in microbit, which is this little guy right here on the front of our Bitcoin, just so that we can get better precision. So the idea here is let's say I bought 1 Bitcoin, or not bought, but I earned 1 Bitcoin for my platform fee. This is what it would look like, right? So I'm actually getting a million microbits for 57,000. And so then it does the math, right? Okay, so I'll save. And this is going to create the tranche record first. And then once that tranche record's created, it then creates the journal entries. So that's what it's doing right now. So if I look at my details, right, this is what I just entered. My 1 Bitcoin, million microbits, my credit account, and the amount. And so then that corresponds to the same journal entry. Then let's say if I look at my chart of accounts, let's refresh here, and we'll see now that I've got 1 microbit, or million microbits, right? I've got a Bitcoin in this wallet, right? I just acquired that. That's why it's there. And we can see that, with that, it put that value of 57 on there. Okay, so that's step 1. Let's move it to the exchange to sell. So that is a straight transfer from one account to the other. We'll do our, so it found that price. Okay, so let's transfer. Now, when transactions with Tranche Manager are created, it uses this field right here to identify what type of transaction it was. You can see right here, it's an acquisition. This is a transfer. And so when we saved this, it looked at the journal entry and said, oh, I'm going from crypto to crypto. Well, that's not a sell. That's just a transfer, right? I'm going from one Bitcoin wallet to another Bitcoin wallet. That's not a sale. If my debit here was fiat, then this would be sell, right? Because it would say, oh, that's a sale. It's leaving my world.
Right.
But a transfer is not. So now notice this exchange rate's automatic, right? I'm just moving crypto from one wallet to the other, almost as if I was doing it with my bank account, right? I'm moving my value across. I have to make sure I get my nominal amount, right? Otherwise, my bank rec's not going to tie out, right? So the nominal amount in these cases is really key, because that's really how cash is treated. It's the number of tokens, right? So this is this is 1 Bitcoin at 55, right? And so if I look at my GL impact is moving 55 from one to the other. This is basically the way currency transactions are working, right? So if I move from USD to euros, I'm doing the same thing, right? I may have received my deposit at one exchange rate, but when I transfer those euros to another account, right, I'm probably going to use a different rate because it's going to be whatever my spot rate is for that day. My nominal amount is always the same, right? That's the way it's moving, but the value is changing. And then what NetSuite is going to do is going to true that up with a mark-to-market adjustment. So
Does that
that's
also mean in these transfers that the basis is transferring right along with the asset?
Well, that's a really good question. So what happens is this tranche acquisition here is really what locks us into a basis, right, for this crypto. And so whenever it comes time to sell this Bitcoin, I'm going to sell it with this cost. So whatever I sell it for will be my gain or loss.
And that was the cost. And that was the cost during the acquisition journal.
That's exactly right.
All right. So the basis went along with it. The system knows.
Well, the system knows when it's time to know. At this point, it doesn't know because I haven't identified the tranche. I don't, and so that was the big change when we went to FIFO processing. Is we want to simplify that, and we can disconnect tracking it at that level. We don't need to identify the tranche because these are in the same wallet group.
Mm-hmm.
If this was crossing wallet groups, I'd have work to do, right? Because now I have to, we'd have to have a policy. Does that mean we recognize my gain or loss, or I do it like there would be a difference if I was going between wallet groups. But as long as this wallet group is the same, there really isn't a change in the way I need to do my accounting because this is still true, right? I still have a million microbits at this cost, and where it is, well, I know it's in this wallet group, right? Because that's what the wallet group is. And so if I look at my chart of accounts, let's refresh. So take a look at this. So the wallet that I acquired that in shows 0 Bitcoin. And where it went to shows the Bitcoin, right? So on a nominal basis, this is correct. And now what NetSuite is doing is it's basically just waiting for my mark to market to say, hey, 0 shouldn't be 2000, right? So if I do a mark to market on this, it'll correct this. And then when I do a mark to market, it'll say, what is this million, microbits worth? And it'll put this at that value, right? So if I'm doing mark to market, and that's built in for NetSuite. And from a pure tranche manager perspective, right, it cares about Bitcoin. And so it's caring about these nominal values. And so I moved that Bitcoin from this wallet to this wallet. And that I know is accurate. And when I do my bank rec, that's what I reconcile to.
Mm-hmm.
Just as if it was Canadian dollars or euro. It doesn't matter what my US dollar value is. I reconcile my bank account in the currency of my bank account. And then once I know my bank account balance is accurate, then I do my mark to market to get my valuation correct, right? That's just currency accounting. So we're not doing anything different, right? This is just another currency. But a lot of companies have to do impairment, right? So they don't run that mark to market. They wouldn't run a mark to market on this. They would only write down the Bitcoin, and so that's a different process. Okay, so the next thing I'm going to do is I'm going to sell. Let's just say I sell half of this, right, in a transaction. Okay, so in that case, what I'm going to do is when I sell Bitcoin on my platform, I'm going to sell it right into my settlement account. So I'm going to debit 1088 and credit 1087. All right, what am I missing here? All right, so we could sell it at the same rate. Let's sell it a little bit different rate. This sale would be based on whatever debit hit my settlement account, right? So this is saying I should be able to go to my brokerage statement and see a debit for 30,000 to my USD account. So I think that exchange rate for this type of transaction, you have an anchor to your exchange rate. So I think that's what you always plug to, right? Because I want to get this debit to be right. So as long as this debit's right, then I know my exchange rate's going to be it's going to reflect whatever my transaction value was. Okay.
But where can we see the realized gain lost amount?
Okay, we haven't gone there yet. So what's interesting, right, is I sold this. So now the system says, oh, that's a sale, right? Because I Bitcoin went out and fiat went up. That triggers this to be a sell. Okay, so now let's look at our chart of accounts again. Okay, so Bitcoin, well, we know that's zero, right? That's where I acquired it. Then I transferred the whole thing out. Then I sold half of it, so that leaves half left. And there are my funds, right? That 30,000 added to the 58 that was already there. Okay, so straightforward, right? Now, I think from an accounting perspective, right, what I want to do first is I want to reconcile my accounts, right? So once I've reconciled these accounts, I know my transactions are good, right? So I validate my transactions because I've reconciled my accounts, and now I can do gain loss processing. So it's a batch process. We've got to disconnect between the tranches and the wallets after that acquisition. That acquisition declares this Bitcoin came into my system at this price, at this cost, into this wallet group. So it declares that this is in my world. When I sell, what I really need to do is just select my accounts that I'm impacting, and this knows what wallet group that I'm selling, right? Because it's coming out of this wallet. So by doing this, what I've really done is I've selected my wallet group that this applies to. Now, when it's time for gain loss processing, I know that I have to go to the wallet group associated with this FIFO stack. Let's run through the process, and I'll show you what I mean. So in fact, one of the things we have here is this gain loss preview. And so the purpose of this is to show a preview of what's going to happen when I process my gain losses, right? So it's kind of a check before I do the work, so I don't have to undo things. And so what this says is, it kind of backs into the process. It says, I sold this much, right? You know, I sold this many Bitcoin. Now start at my top, right? Start at my oldest tranches. I only had one, but this is in sequence by date. So if I have 100 tranches, it starts at the very top and it'll use whatever it can and work its way down the FIFO stack. So when it gets down to this item, right, it says for this tranche that I acquired on this date, I'm now selling half of it. And now it knows what that cost was because that cost was on this transaction, right? So it knows because it's saying, hey, based on my FIFO stack and my sales for the period, I know which FIFO stacks which tranches I've sold based on my FIFO stack sequenced in order. Mm-hmm. So by selecting this tranche, I know my value, therefore I know my gain loss. And so when then I add up my gain loss, I can see that, oh, okay, for $30,000 settlement, 28,500 was my cost, and therefore then it knows the gain loss. And then it's also then showing, okay, after this is finished, this is your new FIFO stack, right? You have half a Bitcoin remaining, and you know your cost is still your cost. So let's go through that process now. So it starts with a batch, and if I look at the batches, okay, so I select my wallet group, and really that's what defines a batch is looking at the wallet group that I want to process, what my cutoff is, and the first thing it does is it goes and looks and sees what transactions are part of this batch. Oh, there they are. Okay, so that step was done. So what it's done is it said, show me all transactions that have not been included in a batch that are hitting my wallets, right? So these become part of what I need to consider for my day or my period, you know, however often you run these batches. Part of the idea here is, you know, having some controls over what's going into my system. Well, let's review it before we just, you know, put it in the ledger, right? I think a lot of separation of duty and SOX stuff is kind of trickling down to everybody, and that's what we want to do. So this is a way for us to review this before we proceed. And so what I'm doing with my first approval is just saying, yes, I've approved my source transactions. I'm ready to go. Right. Okay. So maybe that means I've reconciled my accounts, and therefore I know they're good. I know they're complete. Okay. So let me start the actual job then to do the FIFO. Okay. So now it's going to actually run the process, and what it's doing is essentially what we saw here on this release, the gain loss preview. Okay. So it just created this extra transaction, which is our gain loss transaction. Let's open that. So right here is where it gets tied together, right? This is our transaction that records our gain or loss associated with the sale here. And now this is the point where we tie it back to the tranche and we know what our cost basis was. So if this sale had, let's say it ate into 5 tranches, right? Because we had a big sale and we had small tranches. Well, this would actually have a whole bunch of lines because I'd be identifying every tranche that I'm selling into. So in this case, it was just one, so I only see that one there. But by selecting the tranche, I know my cost basis, right? Therefore, I know what my realized gain and loss are.
Question on this. So the other side of this entry right now is to impairment. What would be the other side of the entry in our case? Unrealized gain loss?
Well, here's the realized gain loss right here.
Right.
It would probably still be this impairment. So when it does its mark to market at the end of the month, it's going to hit the actual wallet and then hit unrealized gain or loss at that point, right, with the mark to market. And so what this is really a reclass of that. So when you guys do it and you're doing mark to market, I think in your case this would be probably that unrealized account, right? That would go along with that.
That's what we do currently. Yes.
Yeah. Okay. So then I think that's the same thing in your case when you're doing mark to market. Now, the reason this hits this way here for if you're doing impairment, you run it a little bit differently. You don't really use NetSuite's mark to market. And therefore, because of that, what happens is you can't make an adjustment in USD to that wallet, right? Like I can't make an adjustment to this wallet. I'm sorry, this one, right? So this one has $2,000 US in it against 0 Bitcoin. Doesn't make any sense, right?
Mhm.
And really, where that $2,000 is it ends up sitting in that contra account, because that's where then when I do that write-off at 15 of the gain, it's going to end up sitting in this impairment account. And so when you're not doing the mark to markets to true this up, what ends up happening is your accumulated gain or loss sits in this account to offset the value that sits here, if that makes sense. So yours is probably a little cleaner from that standpoint because you will use mark to market and yours will true up automatically right here when you guys run that.
Mhm.
When you're running impairment, this number ends up sitting in this valuation account and the negative, and that's why in this scenario this looks like that.
Got it.
So we can keep going deeper, but I kind of feel like that's the base introduction to the tool.
No, I think we're good. That makes sense to me. I mean, this is the exact module that we need to manage our crypto inventory as well as any unrealized gains losses or realized gains losses to the extent we have purchases and sales.
I think that use of foreign currency example totally help, plugging the concept right away. Yeah.
Yes, that's right. That made it easy for me, right? As just a bean counter, right? For me, it's just the same as any other currency, right? I've closed the books and done mark to market and done currency, right, stuff. So if we kind of take that perspective, boy, it doesn't feel any different, does it?